Did you recently get your cheeks clapped on CCIV? Or maybe you found out the hard way that some of these 5x or 10x guaranteed stocks that your favorite YouTubers are peddling to you aren't exactly what one would call wise investments. Well, today I may just have the boomer stock for you. The one you need, but certainly not the one that your gullible butt deserves. Today on Stock Shock, we're going to talk about Lockheed Martin. Who are they? Are they a buy right now from various investing perspectives? And also a side conversation on who actually spends more in war, Republicans or Democrats. LMT, Lockheed Martin, they are the biggest player in the United States military-industrial complex. They bring in revenues through helicopters, jet planes, missiles, missile defense systems, and now space. You name it, they can help you blow it up. From a value perspective, we see they're trading extremely nicely at a B+ from Seeking Alpha. They're leading their peers in PE, PEG, EV to EBITDA, net profit margin, and EV to free cash flow. You can see they're also not too bad in price to sales and price to regular cash flow. If you're all about them dividends, then they're actually a pretty good play from that aspect as well, with a yield right now of 3.05%. Their payout ratio is 39.49%, and their 5-year growth is 9.68%, which isn't too bad. However, over the last 5 years, they've had 1 or 2 years where they either kept their dividend flat or went down slightly. So it's a bit inconsistent and a bit unsafe.
I don't like you because you're unsafe.
That's right. I am dangerous.
I personally feel that from a growth perspective, they're actually not as bad as some metrics would make you think they are. They're best among their peers in ROA, ROE, and ROI. And you can see here that they're actually the best at revenue growth right now as well, which is surprising with some of the other players that are among their peer list here. They also lead in ROIC, and again, you can see here comparing them to their peers, they're leading in revenue growth both year over year and actually surprisingly in the forward revenue growth as well. So while the industry and more specifically the peers and sector that they are in specifically has low revenue growth relative to the whole market, they are still the leaders among their peers. Trying to nail down a fair value on Lockheed Martin, Morningstar, which uses mostly a discounted cash flow model, they value them at $433, which is over $100 from where they're currently trading. Others even have had them anywhere between $400 to $500. I personally value them around $395 to $438. This segues perfectly into one thing I want to briefly touch on. A lot of the estimates that others have given when I'm looking up fair value mention the fact that they're lowering their estimates due to them expecting a shifting priority within the federal budget when it comes to military spending. But who actually does spend the most in military budgeting? Here we see the chart of the United States defense spending from the year 1900 up to 2018. Now, traditionally, we like to think that Republicans are the more war-hungry side of the American politics spectrum. However, if we overlay this chart with the current sitting administration at time, we see that the spending is basically even. And when you run the math, it comes out basically even. I don't anticipate any difference in us changing our defense spending over the Biden administration. So I don't actually think that this should be counted against them as a negative. I feel like the market is overreacting to a situation. Moving to momentum, we see that on a 2-year chart, they are almost down to where they were 2 years ago after having quite a rise and fall. Obviously, COVID was the major fall there. Over the last year, they've just been slowly starting this downtrend. When we move into the 6-month chart, we see that it's pretty much been continuing with little interruptions. Moving into the 3-month current chart with the averages, we see that we are over the 25, but still under the 50, 100, and 200 SMAs. So we're still in a steady downtrend. This is my trend line here in white. So we are still heavily in a downtrend, and I very much expect that to dip right back down below the 25. So not looking great from a momentum perspective. So is it a buy? Well, if you're a value investor, yeah, but I might want to wait just a tad bit as this downtrend possibly continues. But even still, I think it's a value buy right now. If you're a dividend player, I'm going to say yes. But if you're one of those people who's very strict about your dividends and you've got to have all your ducks in a row and you're a little worried about the fact that they on occasion will not increase their dividend, you may want to slightly wait until it drops lower so that your dividend yield is a little higher. If you're a growth investor, absolutely not. There are better opportunities elsewhere. While they're not a slow growth company necessarily, they're definitely not a high growth company either. Momentum, you're not even going to look at this stock. It's not proven its trend yet. Me personally, as someone who's a mix of value, growth, and momentum, just an all-around trader, I like the stock, but I want to wait until the trend is my friend. If we look at the trend right now, this is over the last 6 months. We're still in what is definitely a downtrend. And while we currently have this small uptick here over the last few weeks, it's not technically an uptrend yet. I want to see these 2 green candles here. I need to see some engulfing. I need to see some action. I want to see 2 popping up over this resistance line and with good volume at the bottom as well, above average volume. We've got this resistance here. We're going to get resistance at all these SMAs. I'm willing to buy before then, but like I said, I'd like to see it pop through this resistance and actually prove to be an uptrend, and then I'm all about buying this stock. In the video description is our email if you want to join our Discord, where we talk about stocks every day and all things building wealth.